answering your questions about retirement. It's Money Talk with Michael Eastham.
My wife and I are about to retire later this year. I'm 67 and she's 65. I have a pension at work that will pay me $2,000 a month for just me, $1,300 a month for both of our lives, or a lump sum of about $430,000. How do I figure out the best option to pick?
Pensions can be a little bit tricky if you don't know all the ins and outs, especially if you're trying to make decisions about long-term income. Now, in your particular case, you've got the lump sum option of $430,000. You have a single life payout of $2,000, or if you want a spousal continuation, $1,300. Those are the three primary options that you mentioned. Now, let's think about it for a second. I think it's always important to consider the income for a surviving spouse. If that $700 difference is going to totally train wreck your collective retirement, well then it may make sense to go with the higher number. However, if you were to pass away, then that $2,000 disappears completely and your surviving spouse won't get any of that money. If you take the $1,300, of course, that can make a difference for both lives. Now, think about that. Over a 30-year retirement, the $700 difference in income, that's over $250,000. That's a sizable amount of income. So take that to heart in consideration as you think this over. Now, on the other hand, the $430,000 lump sum distribution could give you much more control over that asset. It could give your surviving spouse additional options for income when you pass away. And it could last and be passed on to the next generation if there's anything left. You see, with that fixed amount of a lump sum, not only do you have lots more options to invest that money, you've got the entire universe of investments at your fingertips, but you also have the ability to start income and stop income. Take a lump sum, not take any for a certain period of time. If you don't need that income, you don't need to touch it. That's great news. If you need that money, then you have flexibility as to how you take it out. And for a surviving spouse, that could mean all the difference in the world between success and failure in retirement for both of you. So always take into consideration the income needs of a surviving spouse before you make a decision about which pension option do I take. And then, of course, the one that you can't ever take for granted is the fact that, listen, many companies have changed their pension payouts for pension recipients over the years. And you don't want to be stuck in that situation either. So you've got to look at the funding of that company that is providing you the pension guarantee. Because once you turn that pension option on, you can never change it for the rest of your life. Think about that really hard before you make a decision. Hope that helps, but certainly reach out to us. We can look at that pension in the context of all of your financial needs and help you make an informed decision. Love to help you do it. Thanks so much, and we'll talk to you soon.
If you've got a financial question you'd like to have answered, click on the link below to submit your question. You may hear your answer on an upcoming edition of Money Talk.